millions of public sector retirees are about to receive a financial boost that could add thousands of dollars to their bank accounts. A change that many have been eagerly awaiting for years. But here's where it gets controversial. This relief comes after decades of frustration caused by two complicated rules that unfairly reduced their Social Security benefits. If you've ever worked as a teacher, police officer, firefighter, or held another government job and earned a pension outside the Social Security system, you might be eligible for a significant windfall. Here's the big news. The Social Security Administration, SSA, is rolling out one of the largest retroactive payment efforts in its history, thanks to the recently passed Social Security Fairness Act. This law wipes out two long-standing provisions, the Windfall Elimination Provision, WEP, and Government Pension Offset, GPO, which historically slashed benefits for retirees who had pensions not covered by Social Security taxes. These outdated rules have been a source of frustration because they essentially penalize people for receiving both a government pension and Social Security. Signed into law on January 5, 2025, the Fairness Act reverses these cuts, restoring the full value of benefits to roughly 2.8 million Americans. The SSA has already updated most individual records and started sending out lump sum retroactive payments covering reductions between January 2024 and March 2025. On average, beneficiaries are receiving about $6,700 in back pay, along with an ongoing increase of approximately $360 added to their monthly checks. Wondering if you qualify? Here's what you need to know. 1. You must have lost Social Security benefits due to the WEP or GPO rules. These provisions mostly affected public service workers who had pensions from jobs where Social Security taxes weren't paid, often called non-covered employment. 2. You needed to have collected Social Security benefits at some point between January 2024 and March 2025. Those who received benefits during this window will get a retroactive payment. New recipients who claim benefits after March 2025 will benefit from the higher monthly amount going forward, but will not receive a lump sum. 3. Your SSA profile must have your current address and banking details. Because the SSA can only deliver these payments to up-to-date accounts, double-check your information on the My SSA online portal to avoid delays. If you're still working in a non-covered government job, you won't get the retroactive lump sum just yet, but your future benefits will be higher once you retire and apply. Why is this payout happening now, after over 2 decades of attempts to repeal these unfair provisions? The breakthrough wasn't just political. It also required technological upgrades. Alongside the policy change, Congress provided funding for the SSA to modernize its aging computer systems, some of which were nearly 70 years old. Recalculating millions of benefit records was a massive task. Most cases were handled by automated processes, but roughly 9% were complex enough to require manual expert review. This review phase delayed some payments, but ensured accuracy, with most back payments expected to be completed by mid-2025. To see if you're eligible and stay updated, log in to My SSA Online. Once your record is updated, a notification banner will appear. Keep an eye out for a CP 126 notice in your mail, which will detail your new monthly benefit and the exact lump sum amount you're receiving. Use reputable online calculators from nonprofit retirement organizations that can estimate your corrected benefits after the repeal of WEP and GPO. There have been some hiccups. A number of retirees under the Civil Service Retirement System noticed Medicare Part B premiums being deducted twice, once from their pension and again from their Social Security payment. The SSA and the Office of Personnel Management have confirmed the mistake and promised automatic refunds by the end of the quarter, with no action required from retirees unless the refund fails to appear. Historical context helps put this effort into perspective. Catch-up retroactive payments from SSA are rare, but not unprecedented. Back in 2000, a delayed cost of living adjustment resulted in the distribution of $1 billion in arrears. In 2006, changes affecting veterans' wage credits led to yet another wave of retroactive benefits. This current Fairness Act is by far the most substantial, with experts expecting about $14 billion in back payments and ongoing increased benefits within its first 2 years. But with more money in the system, there's a dark side to watch for: scammers. Fraudsters often sneak in when big payments go out, hoping to trick recipients into handing over personal information or money. Keep these safeguards in mind. The SSA never charges fees to speed up payments. Any message or call saying otherwise is a scam. SSA employees will never ask for gift cards or cryptocurrency payments. These requests are phishing attempts. Official updates only come from the SSA's official website. Beware of fake sites or emails. If you suspect a scam call or communication, report it immediately at 800-269-0271. This monumental change isn't just about money. It's a long overdue recognition of the service and sacrifices made by the millions who dedicated their careers to public service. The repeal of these punitive rules corrects an unfair part of the U.S. pension system and returns to retirees what they rightfully earned. So take the time to check your SSA account. Make sure your details are up to date and think carefully about how you want to use this newfound income. Whether that's investing for the future, saving as a cushion, or enjoying some well-deserved spending. Yes, it took years to get here, and the process was painstakingly slow. But now the payoff has finally arrived. Isn't it worth the wait? Where do you stand on this repeal? Do you believe these changes fixed an injustice? Or do you think the original provisions were necessary to balance the system? Share your thoughts. Should the focus now shift to other Social Security reforms? Or is this the right place to start? Let the discussion begin.